Hello, everyone. In this short video, I will be showing you the answers to our exam 2 review. Okay, so let's start with number 1. We have this company that sells merchandise on account for $5,000 to Langston Company. And the credit terms are 2% if paid within 10 days. The question is asking, what is the amount of the check? So we have a company that's selling merchandise. And it doesn't really matter if you're the buyer or the seller in this case, because it's the same amount. So if we are the seller, we would have an accounts receivable at the time of sale. So let's set up the account. Okay, so the account receivable will be originated for $5,000. Okay. However, the customer is returning $1,000 worth of merchandise. So remember, we have to subtract that from the receivable. So now we have an updated balance in the account receivable of 4,000. Okay, so 5,000 minus, so this is your debit. So this is the sale. Okay, this is the return. So this is your credit. Okay, so now you have a balance of 4,000. All right, so if the balance is 4,000 and the customer is paying within the discount period, they're not going to pay the entire amount. They're going to pay a little less. So the cash that the company will get is 98% of the 4,000 because we have to subtract the discount. Okay, so it's the 4,000 minus the discount. So this is the account receivable. Let's relabel this minus the discount. The discount is 2% of 4,000. $80. Okay, so the cash account or the cash amount that we're going to get is the 4,000 minus the 80. Okay, so the answer is A. Okay, so you can mark number 1, A. All right, so let's move on to the next problem. So now we have number 2. And in number 2, we need to figure out what the gross profit is. And what is the gross profit? Okay, so let's start with the first line item in an income statement is revenues. Okay, so to revenues, we're going to subtract cost of goods sold, and that's how we get gross profit. And you stop right there. We don't want to go any further in the income statement because the question wants the gross profit. So let's see how we're going to get revenues. All right, so we have a little bit of adjusting to do because we have sales discounts and we also have sales returns and allowances. So what are we going to do? We're going to pull this down a little bit here. Okay. We can call this net revenues. And let's start at the very top with gross revenues. Okay, so we have revenues. Let's assume that is gross revenues. We're going to subtract the sales discounts. And we're going to subtract the sales returns. Okay, so revenues is 320 and discounts is 12,000 and returns is 18,000. Okay, so these are negatives. So we can say negative. Let's just change that. Okay. Negative 12,000 and negative 18,000. So if we do 320 minus minus, we get 290, right? So that we're just going to put the sum because I made the other two negatives. So that should give us the 290. Okay. So 290. Okay. So 320 minus 12 minus 18, 290. Now we need to subtract the cost of goods sold, which is giving us 174. And now we can compute the gross profit. Okay, we go 116. So E is the correct answer. Okay, let's move down to number 3. Ignore these lines. Okay, it's probably Grammarly telling me that they don't like the format. So ignore it. Here we go. So here's where it gets a little tricky, right? LIFO, FIFO. What do we do? Okay, let's set it up. That's going to help you. Okay, so we can do an inventory account. Do a T. T. We have all this activity, right? And this, oh, what just happened here? Supposed to be T. There we go. And, uh, okay. So let's make this cell a little bigger. Okay. It looks like the company started business that year. So our beginning balance is going to be 0. Okay. 0. So let's add all these purchases that we have. Let's organize our information first. Okay. So on June 1st, we have purchases of 150 units. And this is the total. And you can tell by the answer. Okay. So if we multiply these two together, you're going to get a very large number. So we can just ignore. We don't have to say 150 times 390. Just by looking at the answers, you know that you're within range. This is the total, okay, that we paid. So by the way, what we could do just to make it easier, okay, within the T account, I'm just gonna adjust this a little bit. Let me just remove this. Say no borders for now. Let me give it a few cells so we can itemize. If you want to help your inventory, let's make it, let's label it. And this might help you when we label things, helps. Okay. Mm, So now the T is expanded. Okay. So we can say units, cost per unit, okay, and total cost. Right? Let's label it that way. So units, the total cost is 390. So if we wanted to know the cost per unit, cost divided by units, right? So remember, the name tells you what to do. Cost over units, cost over units. And that will tell us what the cost per unit is, okay? And then we have the purchases on June 10th. Let's write it down. We purchased 200 units for a total of 585. And then on June 15th, we purchased another 200 units with a cost of 630. Then on June 28th, we purchased 150 units with a cost of 510. Since I'm doing this on Excel, Excel can do the formulas for me. So I'm just going to drag this down and get the cost, okay, per unit. So it's doing the same thing, this over this. Cost per unit, cost per unit, cost per unit, and we get the cost, okay? So let's compute how much do we have available. Computing the available number is very important, okay? So in this case, we're going to add all the units that we have, including the beginning. In this case, we have a 0 for beginning. So available, we have 700 units. And the total cost, if we include also the beginning, which we have nothing in this case, is 2,115. Okay, let's draw a line so we know this is what we have available. So what we have available, we know at the end of the month is either sold or we still have it. So if it's sold, it will be here. Or if we still have it, it will be ending balance. Okay. So where are these 700 units? Well, down here, we're being told that we still have 250. Okay, let's write 250. That means that we sold how many? Well, if we had 700 available and we still have 250, that means that we sold 450. Okay. Now the question is asking for the value of ending inventory. So really what we want to stay is right here. Okay. You might want to like map this out somehow. This is your focus of interest, not the sold, the ending, okay, ending inventory. So we can call this ending, instead of ending balance, let's call it ending inventory. This is the ending inventory section. Okay, the 250. What is the value of the 250? Well, you're using LIFO, okay? So last in is the first one out. So 150 out. Actually, what I'm going to do is I'm going to copy and paste. These are out. Okay, so I'm going to copy, paste over here. Out. 150. We sold 450. So these, boom, out. Out. So last in, last in. Now we need from here. But so far we have 350. So we only need 100 more. 100 that we purchased at 2.925. So we're going to copy this. So you see the sum of all this. Oh, should have said copy. So the sum of this is the 450, right? Let's do it again. Here, I'm going to add these three numbers. Boom, 450. Okay. So the 450 that I sold, first batch out, second batch from down to top, okay, out, and then 100 from this batch out. So what do I have left? I still have 100 of this batch. I'm going to write that down. Actually, I'm going to copy this because it's the same numbers, okay? I'm going to copy that. I still have 100 that I purchased for 2,925 each. Okay. Oh, by the way, let's revise this. Okay. So 100 times 2,925. Okay. Gives us the total. Same here. 292.5. Okay. So 100 units at 2.925 per unit, 292.50. And we also have this batch left. We haven't sold that yet. So here you go. You got the sum of 250. Okay. So 100 plus 150, that's your 250. Okay. So let's add the value of these two numbers. Okay. That will be our answer. And let's box it in so we know that's our answer. Okay. It's rounded up in our solutions. Okay. So right here, 683. A is your answer. Okay. All right. Remember, when you don't know what to do, just organize the information. That's one of the skills that we really want you to learn here in accounting. Okay. Organizing information. So set it up and then you start working, okay, and see what your focus is. Is it the cost of goods sold or is it the ending inventory? What is it the question is asking about? Okay. All right. Next, lower of cost or net realizable value. So in this case, we're going to pick for A, for B, and for C. What are we going to use? The lowest of the cost or the net realizable value. So for A, we're going to use 112. For B, we're going to use 76. For C, we're going to use 155. So total is the sum of these three numbers. So your answer is 343. Okay, 112, 76, 155, the lowest of each. And then add them all up together. Okay. All right. So next two, it's very theoretical. We don't have to solve for, it's not in numbers, okay, but let's discuss. Two individuals, the same activity. Two individuals, the same activity. That is violation of establishment of responsibility. Who's going to be responsible for the cash register? Okay. Two individuals, one activity. A is the answer here. Just going to write it here. The next case is the opposite. In the next case, let's pull it up. We have Jolene, who is the warehouse custodian, And it's one person, two activities. She's a custodian, assets, okay, and also maintains the accounting records. So if the asset and the record keeping is done by the same person, we're not properly segregating duties. So your answer right here is segregation of duties, C. Okay, so we are in violation of segregation of duties. One person, two activities. And right here, two people, one activity is the opposite. Okay. All right. Next one, number 7. In number 7, we have an accounts allowance for doubtful accounts, which is also called allowance for bad debt. Okay, so if you those two terms are interchangeable. So allowance for doubtful accounts. Okay, so that will be T account. It's just actually do it this way. So what is happening here? An aging of companies' accounts receivable indicates that 14,000 is estimated to be uncollectible. That means that the balance at the end of the period of your allowance for doubtful accounts should be 14,000 because this is what we're thinking we're not going to collect. However, before any adjustments, the allowance for doubtful account has a credit balance of 1,100. What are you missing to make it from 1,100 to 14,000? Okay, this is asking for the adjustment to record bad debt expense. Okay, so first we got to figure out the number and then we do the entry. Okay, I'm gonna copy this and paste. Actually, I'm gonna cut it over here and then we do the entry next to it. Okay, so remember the basic equation. Okay, this account has the normal balance on the credit side, so you're gonna have the beginning balance plus the credit minus the debit equals the ending balance. Okay, so what do we have here? We have a beginning balance of 11,000. Let's put one mess later. Let's put that here. Plus X minus 0. We don't have anything on the debit side. Equals 14,000. So we can solve for X. Okay, we can solve for X. So what is X? So X equals 14,000. Oh, I have an extra 0 here. Let me just correct that. Okay, 14,000 minus the 1,100. Okay, so 14,000 minus the 11. Okay. Here you go. So 12,900. So now that we have the number, we can cross off A and we can cross off D. Right, so now what do we want here? We need to make an adjusting entry. We are expensing, we are not writing off. The adjusting entry is the expensing at the end of the period. Okay, so this is an expense. What do we do with expenses? We debit expenses. So our entry will be bad debt expense 2. We're using the allowance method, obviously. Allowance for doubtful accounts, okay, which is our credit, right? As we just determined that this has to be the credit. Okay, so that's exactly what we're going to do. 12,900, 12,900. So what is going on here? A debit to allowance account? Absolutely not. A debit to bad debt expense? Yes. So your answer is C. All right, let's keep going. Almost done. Okay, so what is going on here? Journal entries. So Randy Company, Jouan Company, 10,000 on April 1st. They accepted a 4-month, 6% interest note. Remember, those percentages are always stated annually. That happens with credit cards, with bank accounts, with investments. Every time you get a rate, it's annual, unless told otherwise. But if nothing is said, it's always annual. Okay. Randy Company prepares financial statements on April 30th. All right, so let's pay attention. So only 1 month. Pay attention to the dates. Okay. What adjusting entries should be made before the financial statements can be prepared? So let's figure out what is the interest that, who are we, first of all? Are we Randy or we're Luan? Who's lending to who? So it looks like we are Randy. Okay. We are Randy because Randy Company prepares financial statements. We're being told. Okay. So that is the receivable. Okay. Luan owes us money. Let's see how much they owe us. Okay. So 10,000 times 6% will give us the annual interest. Okay. So we do this times this, and we get the annual interest. Now we divide this by 12. Okay, we're gonna get the monthly. So 600 divided by 12, you get $50. This is monthly. Okay, so it's only 1 month. So what do we want? We want to tell investors that someone owes us $50 in interest. We earned $50 in interest revenue. Okay, and eventually we're going to receive that. So now we have a right to receive money, which is an interest receivable. Okay, interest receivable. And interest revenue. What do we do with revenues? We always credit revenues, okay? Remember, revenues are credited unless you're closing the books. 50, 50. So what's the correct answer? B, okay? So this is our adjusting entry. This is an accrual, okay? This is an accrual. We need to let investors know that we earn $50 and we are going to be receiving the 50 in the future. So B is our answer, right? One. Number 9. Okay, fun stuff, depreciation. So what are we doing here? Moreno Company purchased equipment, 900,000. What are we using? Double declining, double declining. The estimated life is 3 years. Okay, so straight line rate is 1/3 per year, right? So we convert this into, oof, let's just fix it for a minute. Okay, 1/3 per year. Okay, so if we convert this, we need to convert this, let's see. 1 divided by 3. So, okay, 33% per year. Okay, sales. These the percentages. Yep, we can do that. Yeah, 2%. Okay, 33. Now we want double declining. We're gonna do times 2. Okay, that percentage times 2. Double declining, we'll use 66.66% per year. Okay, we're gonna double the straight line rate. What did I do here? Let me fix it. Oh. Okay, times 2. Okay, times 2. Let's make this a percentage. Okay, so now we're going to apply that rate to our double decline. So what are we going to do? We're going to do carrying value, okay, times the rate that we just came up with. This is our depreciation expense. And then we're going to have accumulated depreciation. Okay, so when we start, we have a carrying value of 900,000. That's our book value. Okay, carrying value, book value, same thing. The rate is going to be 66. By the way, this is January 1st. So we don't have to worry about dates, but always look at the date. Okay, what if it's in the middle of the year? In this case, this is asking what is the amount of depreciation expense recognized in year, what is it, 3? Okay, the amount of depreciation expense recognized in year 2022. So year number 1 is 2020. Year number 2 is 2021. Year number 3 is 2022. Okay, so we want depreciation expense uh, for the third year. So let's write the rate. This will be the same. It's constant. Once we get it, it's constant. Okay. So year number 1, 900,000 times 66. So our accumulated depreciation is the same for the first year. I don't know why it's copying it this way. Oh, it's a formula. That's why. Okay. So that's our accumulated depreciation. Now, the carrying value, the second year, would be the amount that we have in the historical cost minus the accumulated depreciation. Okay, so that is your carrying amount, historical cost minus accumulated depreciation. So now we're gonna depreciate the same way since we have the formula. Okay, let's round this. Okay, for sales number, you don't want any decimals. Nope. Okay, so now we have the accumulated depreciation is the sum of these two numbers. Okay, the all depreciation that we have so far. So third year, the carrying value will be the historical cost minus the accumulated depreciation. Oh, okay. So I'm solving in Excel. I'm not rounding. If you're doing it on paper, you're gonna get 100,000. Okay. So here we have to fully depreciate. Oh, do we have any salvage value? Never mind. We do have salvage value. Okay, so it's not gonna be 100,000. Let's do it here. We cannot. Okay, we cannot depreciate the salvage value. Okay, we cannot. So the depreciation expense would be, let me fix this. I don't want any decimals. Okay. The depreciation expense is the carrying amount minus the salvage value. Okay. So, well, 60,000 is the answer. Okay, closest answer. Remember, Excel does not round. If you're doing this on paper, you're probably gonna get the 60,000, which is a rounded number. Okay, so in this case, just gonna clarify, the answer is B. Okay, 60,000. That's your depreciation expense. Okay, and your accumulated depreciation will be the sum of these three. Let's do it again. I just copied it. Let's go back. There we go. Equals sum of, there we go. Okay, so that's your accumulated depreciation. All right. 40,000 is the difference between, so now it's your new carrying value. Okay, 900,000 minus the accumulated depreciation. In your books, you can go below your salvage. All right, let's keep going. The last one. So Nicholas company has decided to sell one of its old machines on June 30th, 2021. The machine was purchased for 200,000 on January 1st and was depreciated on a straight line basis. Okay, for 10 years with no salvage value. So the machine is selling on June 30th. Okay. What was the amount of gain or loss recorded at the time of sale? So first of all, we have to compute the entire depreciation amount. Okay. So we were using straight line. no salvage value, 10 years. So 200,000 divided by 10. That means the depreciation expense is 20,000 per year. Okay, so this is yearly depreciation. So how many years do we have? We bought it in 2021, 2022. No, wait, we bought it in 17. Sorry, we're selling it in 2021. 18. Okay, so at the 17, the entire year we're depreciating. 18, the entire year. 19, 20, we stop right there. So that's 4 years that is fully depreciated. Okay, so we can say times 4. Okay, and we're gonna write. So it's 2017, 2018, 2019, and 2020. We did not finish the year 2021. So we only have 4 years so far of depreciation. Okay. So that is 80,000. And we also need to add half of 2022. 20. Okay. So that will be 10,000 more. So half of 20, 10,000 more. So total depreciation, we can call this accumulated depreciation. It's 90,000. Okay. Okay. So what is the book value? Historical cost of the machine, 200,000 minus accumulated depreciation, 90,000. We just agreed that's 90,000. Okay, so book value or carrying value, same thing. 110, 210, no, 110, minus the 90. Okay, 110. How much are we selling the machine for? Okay. Machine was sold for 65. So it's not asking you if it's a gain or a loss. It's just the number. Okay, but understand what it is. So if we're selling for less than book value, it's a loss. Okay, so the cash proceeds 65. So we have a loss of how much? 110 minus 65, 45. So A is the correct answer. It doesn't matter if it's a gain or loss, it's just the number, but I will probably ask you if it's a gain or a loss. So just know, okay? In this case, it's a loss because you're getting less than what you have, you're carrying the asset for in your books. Okay? All right, guys, this is it. These are the 10 questions. Good luck in your exams.